Dan, maybe let's start by breaking down the positioning of Block versus Coinbase. Right now, of course, they have very different purposes, but if both ultimately want to be that sort of one-stop fintech shop for a younger base of users, who's better positioned?
One single word, Block, Square, right? I mean, they're already there. They have the point of sale business. They've got the Cash App, which is hugely successful. They are allowing people to trade Bitcoin, and they're even thinking further out, which is the TBDX protocol, which is a kind of a fiat to crypto to fiat protocol, which is going to basically create a global P2P network. So 100% Square or Block over Coinbase.
You seem so certain in that. But I wonder, Dan, if Jack Dorsey's Bitcoin maximalism could eventually hurt where sort of the younger generation is going. Coin has taken a much more Web3 focused purpose, talking about DAO tools and an NFT platform. So where this audience, where this group of users is heading, is Block still best positioned?
Yeah, I think it's actually a fascinating point that you're making. Yeah, he is a maximalist, but if you actually read the TBDX protocol very carefully, you see that they don't just talk about Bitcoin, they talk about a multitude of cryptocurrencies. And when they talk about fiat to crypto to fiat, they talk about all these currencies. So I think there's definitely maybe a little bit of a relaxation from that Bitcoin maximalism on their side. But I do agree with you that. And on the NFT marketplace, I do think it's a very positive development for Coinbase. One of my issues with Coinbase is basically, if you think about crypto or Bitcoin or blockchain in general, it should be free. It should be you shouldn't be charging like these fees for that. So I think that it kind of defies the purpose to have a centralized marketplace. It should all be decentralized, and I think that's where Square Block is headed to, and that's not where Coinbase is headed to.
Dan, that's an interesting point that you bring up. We talked to the Binance CEO, CZ, about this a few weeks ago, and he said that some of these platforms, he didn't call any out by name, have hidden fees. So a Coinbase, for example, has the transaction fee, but there's also the spread that it's making that's unclear to the user right now, right? Do you think that eventually users wake up to that and this becomes a payment for order flow type thing where, people want more transparency, or the spread comes down for them and thus their profitability?
So it's, in a capitalist, market, the spread comes down because of market pressures. I mean, you could, if you want to peek into the future, you look at, Robinhood, which we like a lot, which is basically offering it on a pay for order flow, kind of similar situation. So they're essentially offering it for free. That's where it's headed. And by the way, if you look at institutional yields, they've actually come down. There were 2 basis points versus over 100 basis points for retail, and they've been coming down. That's the future of crypto trading. It's maybe not free, but essentially free.